Go. Hello. Hello, everyone. Thank you guys for joining us today. We're going to give a few minutes for other individuals to join in on the call. But if you can, please feel free to take a moment to fill out the poll. It's a little icebreaker. We just kind of want to know what you're thinking, what you're feeling about the VEPs. Again, this is very informal, and we hope that you have your questions ready for us. And we're going to get this thing rolling in just a few minutes. Welcome, welcome, welcome. Thank you guys for joining. As I stated earlier, if you could take a moment to fill out the poll that's popping up on your screen, we're going to give everybody just a few more minutes to join the call. We do have a packed house with a lot of questions today, so we're definitely going to get things going at exactly, it's 101 and we're early, but usually it takes place at 105, but we're going to see. Might have to get started a little earlier. Welcome. I'm going to give everybody just another minute to join the call. We'll get started with some housekeeping rules, a little small agenda, and then we'll get into your questions. It's about 102, 103. Maybe I should give just another second. Well, here we go, 103. All right. So thank you guys. Thank you everyone. As you're rolling in, please take a moment to fill out the poll question that you will see on the screen. We just want to gauge the audience and kind of know who we're talking to and who the information is being shared with and who we can connect with after this call. But again, I want to thank you this afternoon for joining us on our final Green Table Talk series session titled Financing Your Sustainability Goals. This seems to be a very popular topic and conversation. We had so many registered and we had quite a few questions that people dropped for us in the registration. But if you were not able to drop a question during pre-registration, you will have a chance to drop your questions in the Q&A section of the Zoom link of the Zoom. So don't worry about it if you didn't get to drop your questions there. So we're going to give you that opportunity. But I'm excited to have you all with us today and want to thank you all who've joined us for previous sessions and those who are joining us for the first time. And today we do plan to dive into one of the most important and practical aspects of building performance and compliance, and that's how to actually finance the improvements and sustainability initiatives that your properties need. So next slide, please. Quickly, we're going to go over some housekeeping rules. One thing I do ask is that you please keep yourselves on mute to reduce noise unless you're speaking or responding to a question. All questions are asked publicly. Otherwise, you're noted in the pre-registration that you would like to remain anonymous, which is fine with us. We're okay with that. If you would like to respond to a question, please raise your hand by clicking the raise hand button. And once your hand is raised, I will call on you to come off mute to give your response. Please be mindful of your response time. And since there are a lot of questions and we do have quite a few people that registered for the call, I really want to take the opportunity to get to everybody's questions. So we're asking that you keep your response time to at least 60 to 90 seconds at most. So if you were not able to submit a question during pre-registration and sign up and would like to ask a question during the call, please use the Q&A chat section to write out your question, and I will take a pause after the first question that we have on the list and check the chat to see if anybody's dropped any questions in there. If not, we're going to keep it moving and we're going to move into the questions that came into us anonymously. So, again, just be mindful. We won't be looking at the chat section. We will only be looking at the Q&A section. So please drop your questions there if you have any. This webinar will be posted on the Building Innovation Hub's website for anyone wanting to review the information discussed today. And we will also follow up with an email and with the recording attached. If we're not able to get to all questions, we will post them in a post-session email. And you can also post them in the Q&A chat section. If we're not able to get to them, we'll follow up with the post-session email with the recording and all of the guest experts' contact information to allow you to follow up with them individually. And last but not least, please let us know in the chat section, the regular chat section, if you're having technical difficulties or difficulties hearing the presentation via the chat. Next slide, please. And I also want to say I do talk a little fast, so if you feel like I need to slow down, please just jump right off mute and say, I'm sorry, Yolanda, could you repeat that or could you please slow down? It's totally fine. So on our agenda today, the ball was to get things rolling at 1:05. We're doing our current welcome and introduction. We're gonna do an expert introduction, guest expert introduction, and then like I stated earlier, we're just gonna jump right on over into our Q&A chat section with the guest experts, and then we're gonna do some final remarks and closing of the call. Next slide, please. But before I move on, I cannot move forward without introducing the rest of the hub teams, which is my director, Teresa Backus. Also have Associate Director Mary Thomas, and then you have myself, Associate Director of Building Performance with the Building Innovation Hub. Next slide. Now, to introduce to you our guest experts, first up we have Crystal McDonald with DCSEU. She's a Director of Account Management and Workforce Development and will share insights on energy incentives and utility-supported financing pathways. Our next guest expert is Brian, and Brian, please forgive me for if I butcher your last name, but could you say it for me?
Desolates.
Brian Detzelitz. He's representing Wakeif. He's an investment banker with over 2 decades of experience in venture capital and bringing expertise on community-based lending and small business financing that can be applied to building improvements. Our next guest expert is Myra Cobb with Montgomery County Green Bank. She's the Senior Manager of Portfolio Administration, where she oversees their portfolio. She will highlight innovative financing models and tools available at the Montgomery County level. Our next guest expert is Gabrielle I'm sorry, you know what? I'm going to let you say that, Gabriella, because I am not good with pronouncing names today.
No problem. It's Gabriela Kluzinski.
Thank you. She is the Associate Director of Origination with DC Green Bank. She is responsible for business origination, deal structuring, execution, and portfolio management. And on today's call, she will be focusing on city-level financing programs and opportunities for commercial and multifamily properties. And then our newest addition, Melissa. And Melissa, I am going to allow you to come off mute to pronounce your name as well. I do not want to butcher anyone's name.
Sure, it's Melissa Obiji.
Thank you, Melissa. She is the Chief of Staff with Sustainable Credit Partners, a seasoned fund management executive with global experience across private equity, credit, and blended finance, who works across the DMV region to connect property owners with capital tailored for sustainability projects and needs. And now that you've all been introduced to our guest experts, for the sake of time, we are going to jump right on into these questions. Sam, could you go to the next slide, please? And we're going to leave it there for the remainder of the call until the end of the call. So, as I stated earlier, you guys were all asked during registration to drop questions that you may have for the guest experts. We asked you to select the name of the guest expert that you wanted your question tailored to. And the first question that we did have was from Jay Murdoch. I'm not sure if he's on the call or not. He or she is on the call or not. If so, could you come off mute? And if not, we're just going to go ahead and read your question and see if we can't get an answer. You can check the recording for that response. Going once, going twice. Okay. So Jay is not on the call, but his question was for you, Melissa. Melissa, where can I find mortgage company or a broker that really knows energy efficiency, mortgages, and underwriting? I'm doing passive house, like new homes and lower operating costs, and are not considered monetized underwriting. Can you help me?
Great. Well, Jay, you came to the right place because I think on this call you have a number of us that are well versed in the overall energy efficiency type issues that you are looking to include in your project. So I will say that Sustainable Credit Partners provides financing for multifamily residential. So the one caveat would be we don't do single family homes. So we finance commercial real estate that has income stream. And what we will do is evaluate the impact of your energy efficiency improvements on the operating cash flow of the property, and then we can size the loan and the various reserves accordingly. So we will be taking into account the kinds of things that you are looking to when you are procuring a loan. There are other lenders on the call who would probably may take their own approach or a similar approach, and so I would also see if my other peers would like to comment on that. But we are happy to speak with you about projects that might fit our profile, and we also have partners such as Climate First Bank that will do other types of related loans. They will do residential solar, for example. And so if we can't sort of provide you a loan, there may be others in our network who can help.
Got it. And so and thank you for that response, Melissa. Before I engage the other experts on the call to see if they have any feedback to that, I want to get from the audience to see if you guys can drop in the chat. Has any one of you faced a similar challenge with any of the lenders? Please drop that in the chat and let us know. So if you are having those issues, then we can make sure that you are connected with Melissa and the other individuals on the call, just to make sure we help you through that process. So
Yeah, and maybe just Yolanda, one thing also that I would add that can also help is that one of our joint venture partners is a technical services firm that actually does the formal analysis of your energy efficiency and resiliency improvements. And so we have embedded in our underwriting process the ability to evaluate and take into account the impact, both from a financial standpoint and from the standpoint of decarbonization and energy efficiency criteria, exactly what those improvements that you are including, the effects that those will have. And so I'd say that is unusual for a lender to have that kind of embedded process in the underwriting. So again, happy to help where we can.
thank you for sharing that. And I want to see if any of our other guest experts wanted to add anything to that. Brian, would you like to add anything to that?
Well, at the risk of answering my questions further along, but I can wait, or I can share it now.
Well, okay. In that case, we'll wait and let you get to it for a little further along. Crystal or Gabriella or Myra, would either of you have anything you'd like to add to it?
No, I think
Go ahead.
Melissa covered everything. Thank you.
Got it. Thank you. So, Melissa, in addition to that, how does your organization work with buildings and owners and managers to layer funding sources together for maximum impact? And for those that are in the audience, have you ever tried to combine multiple funding sources? What worked for you or what didn't work? So, if you could drop that in the chat, that would help us out.
It's a great question, and it's one of the reasons that we started Sustainable Credit Partners because we saw a gap in the marketplace for a need for a lender that could provide a comprehensive solution. So some lenders, for example, like the CPACE programs, will only provide financing for the actual upgrades themselves, but will not provide financing for the acquisition or refinance of an entire property. So for a building owner that is, or a prospective building owner that's looking to acquire a building, make those upgrades, and then go into a lease up mode, it was harder for them to string together the kinds of financing products because when you use CPACE, you have to get your first mortgage lender's consent. And so, what one of our innovations was to provide that first mortgage lending alongside the proceeds for these types of upgrades and improvements so that borrowers don't have the hassle of trying to understand whether their lender will consent to a second loan or not. And the as far as being able to combine with rebates and other incentives, absolutely. And that's another benefit that we have from working with our technical services partner, Green Generation, which is located here in Bethesda. They do work nationwide and worldwide. They can provide guidance where borrowers may not know about all of the rebates that are possible. And so they have done this for years in terms of guiding what kinds of incentives and rebates are available. So the other gap that we saw in the market, which we've addressed by bringing in this type of partner, is helping borrowers understand the landscape and to achieve, as many benefits as they can and to streamline the process. So by integrating technical services with our underwriting and making available that kind of information to our borrowers, we're hoping to make it easier, faster, and less expensive for you.
Right. Got it. Thank you so much for sharing that. Do we have any feedback or any comment from anyone in the audience? If so, please raise your hand and we will get to you. Don't see a hand raised, so I am going to move on to our next question on the list. And this question is for you, Crystal. What financing strategies or incentives does DCSEU currently have that specifically help multifamily housing owners improve energy efficiency while keeping affordability in mind?
That's a good question. We have a number of programs that serve affordable housing, shelters, and clinics. And we provide services for buildings that exist to serve vulnerable district residents across the board. And so, in terms of multifamily specifically, we have a few programs actually. We did have the Solar for All program for individual residents, and then we also had the community solar program, income qualified efficiency fund based program. That's another funding stream to serve the affordable housing market. And basically, it's really easy to get involved with these programs. There is an application process, of course, and we have required documents that's available on our website. And so you can see what the eligibility requirements are and the documents that we use to verify the income qualifications of the residents. All of that information is available on our website, and the best way to access programs with available funding is just to contact us directly.
Got it. Thank you. So would you say that your incentives could also be stacked, similar to the question before that was asked to Melissa? Or any of these incentives that you guys provide, are they able to be stacked to help keep affordability in mind as well?
I would say yes, maybe not to the degree that other financial vehicles are available, keeping in mind that our incentives are really designed to meet the incremental costs between standard equipment and energy efficient equipment. So our program incentives may not be as much of the project costs as other vehicles are, but we do support income qualified buildings at a higher rate than we are able to at the market rate level.
Great. Thank you. And I want to see if any of our other guest experts would like to add anything to that. I'll start with you, Brian. Would you like to add anything to that particular question?
No, I'm all set.
Myra? think we might be having some technical difficulties. Gabriella, is there anything you would like to add to the particular question?
Nothing in particular to add. I'll just note that a lot of our projects do work together with DCSEU rebates, and so we're happy to have those factored in.
Got it. And Melissa, would you like to add anything to that?
No, I mean that again, our technical services provider is well versed in helping owners identify these kinds of rebates that might be applicable for their projects. So we're very happy to have that all included.
Great. Got it.
Yolanda,
Thank you, guys.
I
Go ahead.
would I would like to add my earlier statement was largely thinking about our kind of comprehensive approach to providing incentives, but we do have a prescriptive incentive path for affordable housing, and that covers everything from lighting and HVAC measures, dehumidifiers, refrigerators, clothes dryers, your clothes washers. So, household appliances, and we're able to support those appliances with our incentives as well. So I just wanted to make that known.
Great. Thank you for sharing that, Crystal. Any questions or feedback from the audience? Anybody has anything they would like to share or any question they would like to add to that? Going once, going twice. All right. We're going to move on to the next question, and this question is back to you, Melissa. What financing gaps is Sustainable Credit Partners currently addressing across the DMV region?
So thank you. And I alluded to that a bit earlier, but just to briefly recap, it's a first mortgage lender that's focused on adapting and embedding underwriting that includes evaluation of energy efficiency, decarbonization, and climate resiliency into the loan process so that it's much easier for borrowers who have retrofit plans or who have a need to refinance a green building that already meets certain standards to get their loan handled in one place without the need to try to identify different lenders that can work together. So it's a first mortgage solution, and it's one that where there is again that embedded technical services, access for borrowers. I would say, and this does have impacts on, we're the kind of lender that is looking for these kinds of upgrades. So we're going to give as much credit as possible to those buildings that are able to lower their operating costs because of their ability to save on their energy costs. And the other thing that I think is an innovation is the ability to understand the impact on occupancy rates from buildings that have a higher performance, both in terms of efficiencies and in terms of resiliency. So in times of downturn, these kinds of buildings that meet higher standards perform better and therefore will lease up faster. All things which enable us to give credit for that in the underwriting process. So I'd say having an experienced lender that looks for and focuses on these kinds of elements that we're talking about here is an innovation in the market.
Right. Definitely. And I did want to point out, I know you touched on it a little bit earlier, but I wanted to see if you would expand on it, and you did. So thank you so much for that. I really appreciate it. Um, does anybody have any feedback to that? Any questions or comments to the response that Melissa just gave? If not, we'll move on to the next question. And that is for you again, Crystal. You also kind of touched on the different incentives that DCSEU has, but is there anything else out there that you feel a lot of building owners may not still be fully aware of?
Sure. So we're well known for our incentives and rebates. One of the things we are promoting and distributing now is it promotes tenants' behavior towards energy conservation. So we have energy kits that are now available to affordable multifamily buildings for their tenants at no cost to the property manager. The energy kit value is about $160. includes some really fantastic pieces of equipment and other things that support energy conservation in unit. Doing in-unit work is difficult sometimes, and so we've created a energy kit. I'm happy to share more information about that as we reach the end of our fiscal year. These kits are still available, and we are really poised and ready to distribute those kits for tenant energy conservation.
All right. Great. Thank you so much. Anyone have any feedback or anything they would like to add to Crystal's response? Do you guys, DC Green Bank, is there anything out there that you think a lot of building owners are still not aware of, or incentives or programs that you guys have that a lot of building owners may not be aware of?
Not necessarily incentives from us, it's just financing options. And I'm happy to go into those a little further in the questions addressed to me later.
Got it. So I'm going to pause right there. We got a question in the chat from Ben, who's on the call, and I like to try to address these particular questions while the individual is on the call. And this question could actually be given to either Crystal or Gabriella. And yes, and I know not Myra because she's in Montgomery County, and perhaps Brian or Melissa may want to add to it, but I'm going to start with allowing Crystal to respond. Ben says, I'm part of a small housing co-op in DC that is going through renovations of its units. We're interested in green incentives, but haven't had the time to look into it. How should we get started, and where can we easily learn about the various programs? So I'll let you start with the answer for that, Crystal.
Sure. Thank you for that question, Ben. The best way to get started is to contact us directly. I do have a team of account managers who are assigned based on vertical markets. We do have someone specifically set aside or lined up and ready to serve co-ops and condos. So you can go to our website to book time with our different account managers, or just contact me directly and I'll put you in touch with the right person to save you some time, give you kind of a one-on-one overview and how to get started with the application process for incentives. The other thing I'd like to add is that if you have questions about any equipment or project that you're currently assessing, we do have engineering staff here at DCSEU ready to kind of walk you through technical assistance to help you evaluate your project opportunities.
Great. Thank you. DC Green Bank, would you like to add anything to that?
I do agree with Crystal's message that the best way to get started is probably with their resources to identify all of the potential costs and what you're looking to put in. Once you're ready to, once you have a full scope of what you're looking to do and you're ready to start talking about the financing, you can start reaching out to entities like DC Green Bank to see what we have available at the moment for co-ops.
Great, thank you. And I know with this being a privately owned building in the district, Melissa, do you think you guys at Sustainable Capital Partners have anything to add to that particular question, or would you be capable of helping Ben with this question or with their needs at their building?
So our solution is a first mortgage product. So ours would really apply to the extent that had the possibility of first mortgage financing for commercial property. So if this is individually owned units that by the occupants, I think that would be more challenging. If this is being financed at the property level by a co-op where you own it and you have a rental stream that pays into the building, that's where that pays into the ownership structure of the building. That's the kind of structure that we can underwrite. So I think it depends on how you are organized and where you're looking, for the loan, because typically our loans cover the acquisition of the property or the refinance, and they're intended to work alongside, these kinds of retrofit proceeds, not so much to just only kick in when you are looking for just, an upgrade.
Got it. Thank you. And Brian, feel free to come off mute if you would like to respond to any of the guest experts and their responses to your question. Did you have anything you would like to add to
I
that?
mean, I think the next question is pretty much the same, and it's directed at me. So do you want me to start answering that, or
Sure. Yeah, no, the next question is actually for Myra at Montgomery County
oh,
Green Bank. I'm sorry about that. And I actually, I'm sorry I said Brian. I was actually talking to Ben, the individual who dropped the question in the chat. The bees are confusing me today, so I apologize. But I wanted to see if you had any feedback to the responses that you got back from the guest experts. And feel free to come off mute if you do. Got it. That was helpful. All right. So we're going to move on to the next question, which is for Myra at Montgomery County Green Bank. Myra, can you share an example of a successful financing package that your organization has supported for building upgrades?
Yes, we actually have two projects that we did in Montgomery County. Um, One was Seneca Village in Gaithersburg. It's I think it's two megawatt, and I'm lying with the number, but it's saving the tenants like over $300,000 a year. And then we did Hampshire Towers. Hampshire Towers, excuse me, I'm a little under the weather. Hampshire Towers is a resiliency hub, and they also did solar, a big HVAC upgrade.
Got it. Thank you for sharing that information, Myra. Montgomery County is a little small part of Maryland, but you guys are
Yeah.
doing some major work over there. So it's always awesome to hear about what you guys have going on over in Montgomery County. So thank you for sharing that. Any questions or feedback to Myra's response to that particular question? If not, then I am going to move on over to Brian. And our next question is for Brian. So any going once, going twice? All right, Brian, for you. What types of financing solutions does Wake provide for multifamily or condo buildings pursuing sustainability upgrades?
yeah, so Wake, if you know, Washington Area Community Investment Fund, we focus on businesses. I think the best place to go for information is the Wake website under services and then lending. You'll see we have two loan products. So one is a term loan, the other is a green growth fund loan. I'm actually an entrepreneur in residence with the Sustainable DC project, and that's also where the green growth fund is coming out of. So these are loans for businesses. They're not necessarily focused on real estate. Depending on the circumstances, some of the, you know, those loans can be used for, you know, upgrading business property and that kind of thing. Both of those loans have a maximum of 250,000, and then, you know, the other criteria is sort of, I think, well explained on the website. So it's not for residential property, more for business property. They have in the past used, you know, have lent for upgrades and retrofits. So it just depends on the circumstances. In my day job, I'm an investment banker, and you know, I see what I think everybody's been talking about here, which is, you know, layering different types of financing. You've got your senior debt or first mortgage. I work with CPACE, haven't done any in the DC region, but you know, I checked with my guy. I there several PACE, you know, loan groups out there. I work with PACE Loan Group specifically. That's the name. I checked with the guys there before the call just so I had the right figures. So they're going, you know, and they are active in DC, Maryland, Virginia. They'll do up to 35% of the financing, and typically you'll have a senior at 50%, so you're getting up to like 85% leverage or loan. You need, you know, 15% equity to go with that, which I think they've been Melissa and someone's been talking about before that. I was surprised they go down to $1 million as their smallest loan. So for some of these smaller projects, that's still a viable option. So I think that's a viable structure for some of you know, an answer to some of the questions. But I think Melissa and others have also been talking about basically a similar structuring package for financing these types of investments.
Got it. And just this particular question alone actually brings awareness to the fact that when we're talking about these sustainability projects, we often tend to lean the conversation towards the building owners or the residents or the building managers. We always tend to forget that there's a business or an entrepreneur or a company that's also leading some of these projects. So maybe there should be a lot more conversation had on how to help those entrepreneurs and those business owners get assistance in these sustainability upgrades as well. But I always see people, individuals ask about multifamily condos. No one ever asks how can the entrepreneur or the business or someone that's in business for themselves get assistance with helping buildings get to where they need to be. So maybe that's a separate conversation we need to have as well. But
Well,
thank you for that information.
I could
Go
just
ahead.
comment a little bit on that because, for example, there are loans in our pipeline, for example, like a self-storage business that has made certain upgrades that will qualify for our financing. So you can apply a lot of the same technologies and upgrades that you would in a multifamily context to, other types of business operations like self-storage, parking garages, hotels and offices. And they involve a lot of the similar types of upgrades, such as LED lighting, building controls, automatic shut off so that the lights aren't on or the heating or cooling isn't going on when there's nobody in the building. And so these kinds of innovations can be applied across the board. And so we're seeing those kinds of businesses adopting the same kinds of solutions. And the results are terrific because you can reduce your energy use intensity by 20 to 50%. And that already drives a lot of cost savings for these owners and entrepreneurs.
Got it. Thank you for adding that into that. But I totally agree. The smart thermostat is one of my favorite things in my house right now, and I don't know how I've lived all these years without it. So I totally agree. So one thing we're going to do, I'm going to first see if anyone has any feedback to that particular question that's in the audience. Going once, going twice. Okay, I haven't heard a lot from Gabriella, and we have quite a few questions on this list. So, Gabriella, if you don't mind, I'm going to actually jump down a few questions and get to one that is directed directly for you. And that question is, how can property owners better prepare their applications to strengthen their chances of securing financing through DC Green Bank?
Sure, thank you. I think first and foremost, what I'd say is the more detailed scope you can provide with pricing and estimates, the better. When we speak to you, we're going to ask you a plethora of questions about your building, what you're looking to do with the financing, how you're looking to structure, what you already have in place in terms of maybe you already have a senior lender or some other components. But we're really going to focus especially on the sustainability elements. So we're going to ask you whether you're going to pursue any green building certifications, or if you aren't pursuing any certifications, what other green measures you're putting in, whether they're related to solar, stormwater, EV charging. And then we're going to ask about the associated costs and the impact that they're going to have on energy savings and carbon emissions. So the more information you could give us about what you're looking to put into your building and the scope of that, the easier we're going to be able to figure out which one of our products is going to be a good fit for you and provide you some answers there.
Great. Thank you. And this question actually is a great segue, and I'm glad I did skip back to Crystal because it's pretty much asking the same question to you, Crystal, at DCSEU. What is the best first step for a building owner that they should take when they're trying to identify the right funding or incentive for a project?
Yeah, I agree with Gabriella. You have to start with your scope of work. And from there, we can help you determine the best path forward. Because I alluded to prescriptive path before. If you have just one or two measures and you have the exact count, and it's like a shopping basket experience, you can just go on our website and apply for measures with an intended rebate of up to $100,000. That's available just on our website. Very straightforward for like kind of one or two measures. But if you're doing multiple measures in your building, it's best to use the custom strategy, the custom analysis strategy. That's when we get our engineers involved and we're able to look at your project comprehensively and apply the best incentive that we can offer. So we have more flexibility in that space. So, but again, start with your scope of work, contact us, and we will provide guidance on which is the best path forward to kind of maximize those incentive opportunities for you.
Great. Thank you. And before we move on from that, I want to know from the audience, how many of you are just starting out versus already in the middle of an upgrade project? If you can in the chat, just let us know. Are you currently looking to get your project started? Are you already in the middle of your project? Or you're just here listening and want to know how to get started? So if you could drop in the chat where you are with your projects, we really like to see those answers. And I want to see if anyone else, either one of our other guest experts would like to add to that particular question, Melissa or Brian or Myra.
No, I mean, we'll, in addition to all of the metrics around the sustainability, we'll of course do a full credit underwriting. So looking at the rent rolls and we will always require a property condition assessment and other things that will guide us as to the credit worthiness and the durability of the loan that we're making. So we will do both pieces of that underwriting.
Right. Thank you. Thank you for sharing that, Melissa. Really appreciate it. And so we're going to move on to our next question, which is also for Myra at Montgomery County Green Bank. Myra, how is Montgomery County Green Bank supporting multifamily property owners who want to align with BEPS requirements while also addressing affordability and tenant needs?
Okay. So we have two ways to do that. We got our technical assistance program that support multifamily properties that's looking forward to complying with BEPS. And we work closely with DEP for that. And we also offer funds to subsidize audits and feasibility studies related to BEPS compliance. We also have several financing pieces. We offer low interest rates. We are kind of like a bridge for financing. We also, for our projects, we also partner with other organizations and other lenders. We have a couple of participation deals, one which I talk about, well, both of them, Seneca Village and Hampshire Towers. And, so through our TA program and our flexible spending solutions, or financing solutions, sorry.
No problem. Thank you for sharing that. And I would typically ask DCSEU and the other guest experts if they have anything to share, but I think they've provided a lot of detail on how they help affordable housing in previous questions. So if you guys want to know more about that, feel free to listen to the video post session and it will definitely give you those answers. So thank you for sharing that information, Myra. And we also have another question that is here for you. And so on a more broadly note, what role does Montgomery County play in helping local business owners access capital for sustainability projects?
Through our financing. So basically we are bridge lender too, and we, like I said, partner with other organizations to make projects work.
And if you guys want more details on that, I will share Myra's contact information post session, and you can definitely reach out to her to find out a little bit more or go into a more broadly detailed response with her for that. So, but thank you for sharing, Myra. We're coming up on the last few questions, and I wanted to have the audience to have the opportunity to ask some questions after these last two questions. So please, if you have questions and you would like to get answers for them, please drop them in the Q&A session. But if not, we're going to go ahead and move forward with the last two questions that were submitted during the registration sign up. And this next question is for you, Brian. How can small property owners with limited resources best position themselves to access WAKIF's financing programs? And I know you spoke a little bit to that earlier, but wanted to see if you wanted to go into more details about it.
Yeah, no, I mean, I think the loan products at Wake are designed for, smaller businesses with limited resources. So again, check the website on the loan products. Revenue does have to be $50,000 or above. You have to be based in the area. There's no credit score requirement, so that's, I think, helpful for a lot of folks. And I think they're happy to be flexible as long as the business or project is attractive. I wanted to, sort of build on what you guys were talking earlier. I mean, you talk about businesses that are sort of property based. I know obviously that's the focus of this call is real estate, really. Um, but WAKIF, the Green Growth Fund and term loans support businesses with no connection to real estate, really. And with the Green Growth Fund, looking at sustainability in other businesses. So even organic foods, organic grocery stores, recycled clothing, that kind of thing. So if anyone's looking at financing for a sustainable business, that's not related to real estate, WAKIF is also interested in financing those types of businesses as well.
Right. So, do you have any type of success stories or testimonials to some of the property owners that you guys have helped with their applications and to secure funding?
You're asking me at WAKIF?
Yes.
Yeah, I mean, real estate's not our focus. We have helped some companies in the past with upgrades and with acquisition. I mean, one potential bar I'm working with now has been working out of a shared space commercial kitchen. Now needs a brick and mortar set up. So that's a great opportunity where that is obviously real estate focused, but it's also really the business that needs the real estate. We've got a lot of success stories in general. I think on the WAKIF website, it's a great place to start to look at the kinds of things we do and some successful models to follow.
Got it. Thank you.
And maybe I can just chime in.
Yes.
We're a new lending platform, and so we're in the process of closing our first loan. So we don't yet have any per se that we can share at this point in time. But I will say that our two partners both have information on their websites about the kinds of financings and upgrades that they've supported. So if you go to greengen.com under resources. I believe it is, they have some case studies that describe what they've achieved for clients. And Climate First Bank has an impact report that I believe is also available on their website, which is climatefirstbank.com. And they have, another range of financing products, as I mentioned, solar. And in fact, they've got a program that they do with Montgomery County Green Bank to provide financing for that, and so that there's information probably about both of those on the websites.
Okay. Great. And I just dropped that link to the greengen.com/resources that you just mentioned. So to the attendees and participants, you can grab that link out the chat if you'd like to go and take a look at some of the information Melissa just spoke to. And we are now up on our final and last question of the session. And this question is for Gabriella. Gabrielle, what makes DC Green Bank unique and how it approaches financing compared to other green banks? And I want to say I'm going to also ask Myra this question because you two are the only two green banks that are very popular in the DMV region. So I'm going to also come to you with that same question, Myra, but I'm going to start with Gabriella.
Sure. I mean, honestly, we're probably pretty similar to other green banks you've heard of. Most green banks, we're location specific, so though our overall structures and missions might vary slightly, what it's mainly about is that we're focused on different areas. So us as DC Green Bank, we're only focused on making investments here in DC within the district. And to back it up a little bit, green banks overall are just mission-driven financing institutions that have some sort of mandate to advance the deployment of clean energy. So we leverage our funds to help stimulate private capital. And the sectors we choose to do that in might vary from green bank to green bank. So for us, for DC Green Bank, we have four core sectors that we focus on. We focus on green buildings, solar, clean transportation, and stormwater resilience. We invest all across the board in terms of pre-development, construction, permanent projects, and support net zero buildings, community solar, EV charging stations, so on and so forth. Our average deal size is typically around $2 million, but our loan size range from much smaller to larger, just depending on whatever the borrower's need is. So hopefully that helps you get an idea of what we do. And the most important thing for us is just that your investment is located here in DC in order for us to be a part of it.
Great. Thank you.
Well, and I ditto the same thing with Montgomery County Green Bank.
And maybe Yolanda, I could just chime in because
Yeah.
while we are not a green bank per se, we are partnered with one. And the thing that I think is interesting is, you've heard from two of the public sector green banks. Our partner is a private sector green bank, which is very unusual. I think they are the only private sector green bank in the country. And so they are a full deposit taking institution. They are regulated by federal banking regulators. And the thing is interesting is they'll take consumer deposits and then deploy them in the kinds of things that we're talking about. So as a consumer, if you want your dollars to go towards green outcomes, you can, open a CD or a checking account, et cetera, with Climate First Bank. And then those funds will be used for the kinds of loans that we're talking about here at Sustainable Credit Partners, and other kinds of green and projects, including for underserved communities. So there's a lot of different ways that green banks can help achieve the kinds of objectives that we're talking about here.
And you may have mentioned it, but just in case I missed it or someone else missed it, are you able to state who that green bank is that you're partnered with, that privately owned green bank that you're partnered with?
Oh, sure. Yes, it's Climate First Bank.
Climate
Right,
First Bank. Okay.
yeah, Montgomery County Green Bank is also a partner with them.
Yeah.
Got it.
And for our loans, we also can partner with other green banks. So it's quite possible that as we progress in our business and the loans that we make, we could find ourselves in a partnership making a loan alongside Montgomery County Green Bank or alongside DC Green Bank. Because one of the benefits, I think, of our product is that we can provide loans between 10 and $100 million. And some of the regional green banks, have smaller limitations on the amount of financing they can provide. And so we can be a good partner to both the public sector green banks and then the private sector partner that we already have. And Climate First Bank, if you want to learn more about them, you can find their website. I mean, maybe Yolanda can drop it in the chat as well. It's just Climate First Bank, all one word, and you can find a little bit more about what they do.
Got it. I just dropped it in the chat.
Thank you.
Thank you. Thank you both. Thank all of you for sharing that information. We have about 6 minutes left in the call, and we asked our last question. But before we jump off, I want to go back and give each of the guest experts an opportunity to highlight 60 seconds what their current business and their current project, what are they currently doing? What are some great things that are coming down the pipe that the attendees should be looking out for? If you don't have anything, we can pass on, but I really want them to know that you guys are out here working for them and the great things that are coming down. So I'm going to start with DCSEU. Crystal, see if you could give us a 60-second spiel of all the great things that DCSEU has and that's coming down the pike that can help with these sustainability projects.
Thank you. So we talked a lot about our incentives and rebates. I'd like to mention our partnership with IMT, the Building Innovation Hub, and the tools that are being created to support different market sectors with BEP support. The worship facilities toolkit is awesome. The condos and co-ops toolkit, that's awesome. I encourage property owners to take advantage of the BEPS resources that are available. We are looking to continue to support projects in our buildings on the commercial and residential side for this current fiscal year, FY25, and we begin our new fiscal year in October, on October 1st. So we're looking, if you have projects that are not coming online until 2026, FY 2026, definitely contact us because we'd like to put your project in the pipeline and get some commitments there. The other thing I'd like to mention is for your facilities directors that are operating your buildings, we do have training courses available here in the district at no cost to the participants. While the training program is designed for contractors doing business in the district, it is open to DC residents working in the district as well. So, yeah, we have lots of resources that you can take advantage of. Contact me directly, or you can book time with our account manager as indicated on our website. And yeah, we're looking forward to continuing to serve this market.
Thank you, Crystal. Thank you, DCSEU, for joining the call. Next, I'm going to see if Brian would like to share any information about what they're doing there at Wake Up.
No, I mean, it's, check the Wake Up website. If you got, I don't know who's competing with who. I mean, like I said before, I use Pace Loan Group. They're great. Lauren Biller there is my contact, and he's the, they can go down to $1 million on their Pace loans for DC, Maryland, Virginia. So I'd encourage you guys to take a look at that. For businesses looking for, financing green upgrades or for just financing green businesses, take a look at the Wake Up website. Um, and I think that's it. Thanks for having me on, and stay green,
Thank
everybody.
you. Thank you, Brian. We're going to move over to Myra. Myra, do you have anything you would like to share about what's going on at Montgomery County Green Bank and that's coming down the pike?
We are currently working with BP to make boot trucks green with the batteries. We are working with Climate First Bank on solar. We are working on a RTA to help improve BEPS, and there's a lot of stuff. So check out our website.
Thank you, Myra. Gabriella, do you guys have anything over at DC Green Bank that's coming down the pike that you would like to share?
Absolutely. We've had a very productive year here at DC Green Bank, which might even result in us having one of our biggest years in terms of deployment. Our fiscal year ends by September 30th, so you'll probably see an annual report coming out shortly after that highlights all of our work if you're interested in checking that out. As always, if you have any opportunities in one of our 4 core sectors, so that's green buildings, solar, clean transportation, stormwater, please feel free to reach out, and I'm happy to chat about your project with you. Thank you, everyone, for your time. I appreciated this session.
Thank you, Gabriella and DC Green Bank. And lastly, Melissa, would you like to share anything about what you guys have going on over at Capital?
Absolutely. So as I mentioned, we are working on our first loan, so we do hope to have more good news to share on those once closed. If you want more information, you can reach out to us at info@scpcre.com. I mean, that stands for Sustainable Credit Partners Commercial Real Estate.com, but the initials are a lot easier. And we've spoken about the work that we're doing in energy efficiency and decarbonization. And I also want to highlight the attention that we pay to climate resiliency upgrades as well, because as a package, these things will help building owners avoid what we call the brown discount. So the risk that building owners will face a decline in value because their buildings either aren't up to current standards and are less attractive either for tenants or upon a sale in the market to another buyer. We are also having an event at New York Climate Week. So if you're interested in that, you can come hear speakers from both Sustainable Credit Partners and our joint venture partners talking about how our product addresses some of the needs in the market for innovative financing solutions for decarbonization. So we're going to be excited to meet more of you up at New York Climate Week, which is the week of September 22nd.
Thank you for sharing that, Melissa. Thank you all to all the guest experts for joining us. We are currently at time. I do want to thank our attendees who submitted their questions, who stayed on to get their answers. And I also want to highlight to look out for the post-session email. It will include contact and email information for all of the guest experts. And it will also include a link for you to sign up for the Building Innovation Hub's website so that you can stay on top and abreast of all of the different events and webinar sessions that we have going on, which includes our worship facility toolkit. I'll be giving that presentation and I hope to see you guys there. So again, thank you. And I really appreciate everyone's time. Bye, y'all.
Thank you.
Bye-bye.
Thank you.
Thank
Bye.
you.